Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, when we buy health insurance, most of us feel a sense of ease if we have a large sum assured as part of our policy. But that might not be enough. All costs lower than your sum assured may not necessarily be cleared by the insurance company. Most medical insurance policies have a sub-limit under several heads on various aspects of hospitalization. Now, this can cause a significant outflow from your pocket. To help us understand the concepts of sub-limits and help us plan health insurance better, we have with us Yashish Zaya, CEO and founder of Policy Bazaar. Welcome to the show. Yashish, before we get into this concept of sub-limits of health insurance policies, now let me ask you, what is a construct, what is a good health insurance policy to buy which has a good, framework about it?
Sure. So let's start with what are health costs. What happens when a person falls sick? When a person falls sick, multiple things can happen. They may go to a hospital, get cured quickly, and come out of the hospital. 48 hours are not over. That is usually called OPD. Second thing that may happen is the person may undergo some surgery. Again, 24 hours not over, left the hospital before that. That's called surgery, right? Third thing is if you're hospitalized for longer than 24 hours. That is usually what is covered by the basic health insurance plans in the country. Now, when you have a health insurance plan, it has certain limitations. We start off with things called exclusions. So certain diseases or certain things are not covered for a period of time. Maybe 2 years to 4 years, they are wait periods. They're usually related to pregnancy. They're usually related to such costs that the individual who's buying the policy would already know those costs are likely to come in. So they are related to pregnancy or pre-existing diseases. So most of these get delayed for a period of time. Then what you have is sublimits. So sublimits essentially say that you have a sublimit is largely around room rent cappings. That your room rent can be 2,000 rupees, room rent can be 4,000 rupees. There may also be sublimits around certain diseases. That in case there is a heart disease, so much is the cost. In case there's a pregnancy, 25,000 rupees or 12,000 rupees or 20,000 rupees. So all these sublimits are there to protect the insurance company from a very large bill that can come because of cost escalations and better. On top of this, you have things called loadings. So loadings happen if you make a claim. You may have a loading. The better insurance policies have no claims-based loading because it's not your fault. You haven't gone to make the claim. It's happened to you. When you bought the policy, you did not know you were going to have a claim. So the fair thing is not to have a claim-based loading, and there are policies out there that don't have claim-based loading. Then there are policies that give you benefits if you make no claims, which is the reverse of that. Now these benefits can come in the form of higher sum assureds. So, if you have a 5 lakh rupee policy, it automatically becomes a 10 lakh rupee policy over the next 3 years.
Right.
Restore benefits, etc. And these benefits, or they can come in terms of lower premium because you've had no claims. The ones that enlarge the cover are usually better. So that's the basic construct of, health insurance.
Right. So now let's get into sub-limits. Of course, you talked about it briefly just now. Explain to us what sublimits are and why are they important to look at when you're going to be hospitalized. Either way, whether it's an emergency or it's something that you need to get done in a hospital.
Yeah. So see, nowadays what's happened is there are lots of types of hospitals available to an individual, from a tertiary care hospital to simpler hospitals to 10 bed hospitals, right? The costs of these hospitals are very different, especially the higher end hospitals can give you lots of options. One could stay in a general ward, one could stay in a 2-people room, one could stay in a single room, one could stay in a deluxe room. There are lots of these pieces out there. The sublimits have been put out there to generally protect the insurance companies from very, very high costs that can come because an individual might avail of a better facility. All the costs are associated with the room rent. So when the doctor comes to meet you for consultation, when the individual is in hospital, the charge that the doctor will levy will depend upon which room one is staying at. Basically, the basic concept of medical treatment in India is that there is one looks at affordability. So if one is staying in a 2,000 rupee room rent room, or one is staying in a 10,000 rupee room rent room, the charge that the doctor will make are going to be different. If there's a surgery, if there's a bypass surgery, if there's any surgery whatsoever, the charges of the two will be different. And the room rent capping basically means if one has a 2,000 rupee room rent capping, then it means that all charges that the company will be able to pay for you will be those which the person with the 2,000 rupee room rent capping can have.
So what you're basically saying is that depending on the cost of your room, all the other services of the hospital are going to be charged.
Many of the services are charged based on that.
Within, yeah, so if it's a A bracket, then the surgery is going to end up costing you much higher.
Absolutely.
And the insurance company is saying, look, we're not going to pay for that extra luxury that you want to get out of your health insurance plan, so you have to pay that separately, in a nutshell.
Yes. And it's deceptive because people don't understand this when they take a room rent cap. They believe that the insurance company, if you have a 5 lakh rupee cover, the consumer believes that up to 5 lakh rupees, everything is covered because there's no specific limitation on the consultation fees or etc. The limitation is on the room rent cap. So I'll stay in hospital for 5 days. The room rent capping is 2,000 rupees. I'll stay in a 5,000 rupee hospital. So 3,000 rupees per day. I'll pay 15,000 rupees out of my pocket. I'm comfortable doing that. However, what one does not realize is that all the costs will be 2.5 times or double. And so if the claim is 3 lakh rupees, one may only be able to get 1.5 lakh rupees as the insurance claim, not just the 15,000 rupee gap, because all the additional costs that have come in, because the consultation was more expensive because you stayed in a more expensive room.
And that one, going by experience and talking to other people, that's a major issue, and that's a major heartburn as far as people. One goes into the hospital without even reading what your caps are or what you're allowed.
Absolutely.
I mean, so what would you advise people to do in that case?
My view is, if you can afford it, avoid room rent caps. But you will notice that room rent caps or sublimits, room rent sublimits, also come with lower premiums. So in case you want to spend 6,000 rupees on an insurance policy versus 3,000 rupees on an insurance policy, a 3,000 rupee insurance policy will most likely have room rent caps also. Now, the second thing I would advise is, look at the hospitals around, see what the room rents are. Are you comfortable? Are you genuinely comfortable with that room rent cap? So if you do want to go for a lower premium policy, if there's a 2,000 rupee room rent cap, are you genuinely comfortable living in a room which is 2,000 rupees? Because if you're not, if you're going to live in the room that is 4,000 rupees, then just spend that extra money and take a policy without the room rent capping. Also remember, room rent cappings are not very good to take in the long run, because today you may take, so just imagine what kind of a hospital room one would get 20 years ago for 2,000 rupees. Sometimes just backward gazing helps quite a bit. In 2,000 rupees, 20 years from now, one may not even be able to step inside a hospital. So the room rent capping on a policy, which health insurance is the one policy an individual is most likely to keep throughout their life. So room rent cappings will work against you as you get older, because with hospital inflation, medical inflation, price of medical, everything going up, you would not be able to avail the facility that you took this policy in the first place for, and the policy will become quite meaningless.
So of course we've focused on room rents. Now,
yes.
Is that the only part where sub-limits are applied? So let's talk about that.
So there are sub-limits applied on certain surgeries, on certain procedures. As I mentioned, there are sub-limits on maternity, which are usually about 25,000 rupees. So if one goes to a very plush hospital and the maternity cost is 75,000 rupees, even though the individual may have a 5 lakh rupee health cover, one will end up paying the difference themselves. Specifically, against each of the surgery types that are mentioned, which are covered, there will be certain room rent cappings. In fact, hospitals have negotiated rate cards for pretty much everything which go with the room rent and the sublimits. So ideally, one should buy a policy where there are no sublimits, because these sublimits will work against everyone as inflation proceeds, etc. But surgeries and procedures, each one will have a certain capping, which would be a sublimit.
So right, of course, sublimits, it's something which is very important that one needs to look at. Tell us, for the sake of our consumers, what is a good way to plan? I mean, you're going to go in for a surgery, right? So how does one go about planning that? Because a lot of heartburn, a lot of people feel, they're cheated for some reason. How do we avoid that? How do we systematically go to a hospital, make sure that we get what is due to us without that heartburn?
Yeah, so I think almost instantly when reach the hospital, you should have understood your plan. But even if you have not, speak to the TPA. There's a TPA desk there, third-party administration desk, which the receptionist will guide you to. Understand what is covered, what is not covered, so that you don't go in for something which is not covered. and you don't have heartburn at the point of exit. See, most of the payments are made when you're exiting, or some advances are paid upfront, but the real billing and settlement happens at the end. But to avoid some misunderstanding at that point, at least even if you've not understood the policy when you bought it, as you get into the hospital, understand the policy so that you make your decisions based on what you are likely to end up spending, rather than make your decisions on without understanding that.
Right, Yashish. Any other types of sublimits that the consumer needs to be aware of?
I think when one is talking about sublimits, there also come things like co-payments, claims-based loading. One should avoid policies which have claim-based loading, which have co-payment, which have significant co-payment, unless one is in a health issue. One should also understand exclusions, because many people do not understand the fact that certain pre-existing diseases are excluded. A single read through your policy document would provide all these things like sublimits, exclusions, and co-payments. But on the sublimit side, because it is worded in such a way that it is not very easy for the consumer to understand its implication, I would advise, if you can afford it, please, avoid any policy which has got sublimits. Because try to take the policy without sublimits.
And is there a major difference, major financial?
I would say about a 20% price difference is there, which is fair also, because when you don't have, with sublimits, you will mostly, if you look at a typical treatment, if the person has used a higher room rent, etc., you will end up getting about 60-70% of the total claim point. So paying another 20%, 25% to get over the sublimits is not a bad idea, especially in case of families, young families, etc. It's very important.
We've got Ridhima from Kolkata, and she asks, can we transfer NCB no claim bonus to a new vehicle, and what is the process for transfer?
This is a fairly straightforward process. So when one is selling the old car to somebody else, at that point you have your no claim certificate, collect the no claim certificate from the insurance company, and when you buy a new car, within the next, I think it's 12 months or so, within the next 12 months, if you buy a new car, when you apply for the insurance, provide the no claim benefit certificate and the fact that you don't have that car any longer and you're moving it onwards, and you will get the no claim benefit. So if you had a 50% no claim benefit, you would get that. I had a 50% no claim benefit, which I had till very recently. I've lost it because I lapsed my car insurance policy by a month or so. I did not renew it on time. So obviously keep your renewals up to date, specifically if you have a large no claim bonus, because if you miss it by even a day, you will miss your entire no claim bonus. That's just a piece of advice.
Right, we've got Shailesh from Pune who asks, I have an 11-month-old daughter. My annual income is 4 lakh rupees. Which LIC policy should I buy for her future or for her studies? So from LIC, there is a plan called Komal Jeevan. In this, it's a child plan which pays out the child at 20, 22, 24 and 26. It's a decent plan like any other child plan. There's only one complication in this plan, that the life assured is actually the child. So in case something unfortunate happens to the child, the funds come back, which is slightly odd. But it's a decent plan. It gives an okay return. The other plans to compare are Aviva Young Scholar. There are 2 plans from HDFC which are quite good. There are a few plans from ICICI. There's a plan from Reliance. So lots of plans in the child category. There's an Edelweiss Tokyo plan which is quite good, gives pretty good returns. When you're buying a child plan, essentially it's the security that the funds will be available for the child when they grow up. So most of these plans are very comparable and very strong for that particular planning purpose. So please do compare. But yes, Komal Jeevan is the one plan that you would look for if you wanted an LIC policy. Right, we've got Sham from Kota, and he asks, I have a group cover from my company, but it doesn't provide dental cover. Does any insurance company provide for dental treatment? No, dental treatment is not covered by any insurance company. Personal accident policies can cover dental treatment if it is an accident. So if somebody punches somebody or somebody has an accident and breaks their teeth or something, those things would get covered. But general upkeep of is not covered in any insurance policy. It's considered cosmetic treatment. But is that the international norm as well? Internationally as well, yes. So internationally as well, most health insurance companies, you would have to take a separate package to cover dental.
dental is not usually covered in a standard health insurance policy. So even in a place like the UK, which has full NHS cover, you would have to pay for dental treatment separately. And the costs are not very exorbitant, but the costs are there, and they're significant. Because it's a voluntary treatment, which is not a must, and people could do it for any purpose. So, where do you draw the line? When a tooth breaks, do you start treating then? What's covered and what's not covered is very complicated. So dental is usually counted within. So dental and cosmetic surgery is usually avoided, because that's people do it mostly to kind of for cosmetic purposes, or people can potentially do it for cosmetic purposes. Let's go ahead.
Right, we've got Rahul from Mumbai, and he asks, he says, I'm 27 years old and my annual package is 6 lakh rupees. I have 2 policies of LIC Jeevan Saral, spending 92,000 annually. I'm planning to take a term insurance and 1 medical insurance. I want to cover myself for at least 70 years, and whose settlement ratio should be high. So he's asking, and also he's talking about his parents. So, what is a comprehensive cover for that? So
there are lots of insurance policies out there. There are about 13, 14 companies that are providing digital online insurance cover. I think you should take one of those. Of course, there is Aviva, Aegon, Bharti AXA, Reliance. Reliance is actually the lowest cost plan running right now. There is Tata, there is HDFC, there is ICICI, there is Kotak, there is India First, there is Max Life. So you've got a huge bunch of options out there. SBI Life is there. So you've got a large chunk of options out there. They've got all sorts of mechanisms. So I would suggest take a policy which gives you an income stream, the family an income stream in case something unfortunate happens. And Max and Aviva have those policies. I think from a premium perspective, you will get a lot of choice, so the cost can be quite limited, and these policies don't cost so much. So about a 1 crore cover will cost about 13,000 rupees, or about 1,000 rupees per month. So for 1,000 rupees a month, you could get a 1 crore cover. Jeevan Saral is a plan that gives you 250 times your monthly premium as cover. From what I just mentioned, 1,000 rupees giving you 1 crore cover. From most of the other online plans, you can get about 10,000 times your monthly premium as your cover. So 250 is actually quite low. So Jeevan Saral is not a very strong
so he also
cover.
Asks about Jeevan Saral. He says that I had a word with a different agent, and he told me that the amount on maturity is not fixed. However, the agent he bought it from said that it would the amount will not vary, and made many promises. So
no, so the amount will not vary. There is certain bonuses that come along which are not guaranteed, but it is a standard endowment plan which has a slightly higher. See, a normal endowment plan, you have to have 10 times life cover of the annual premium. This one says 250 times monthly cover. It's mostly a marketing side story, because if you look at it, you have 12 months. So you're essentially saying your one is providing about 20 times the annual cover as the life cover instead of 10 times. And that's not very significant. So the life cover is quite limited in it. It's a standard endowment plan. It will give you returns of between 2 to 4%. Not a very strong return product. But you've got it. Now that you're in it, there's no point exiting it, because the exit costs are going to be far higher than the benefits of having exited from it. So most of these policies, once you're in them, it's loss making to exit. Yeah, so just stay through it. But do buy a proper term cover, and do buy a proper health insurance policy, because those and you have lots of options there. Do not rely on just one company.
Right. Thanks, Yashish. That's all the time that we have on this show. But do write to us at ask.policybazaar.com or tweet us at policybazaar_in. And we'll see you next time with another episode of Policy Bazaar. Goodbye.